Okay, everybody, it's me, Gregory Mannarino, and here I sit with you, and I'm going to tell you something that, well, in any kind of a real market would just not be happening here. But again, where are we, you and me? We are in some kind of freaking twisted, distorted, mind-blowing insane asylum. That's where we sit today. What am I talking about? People, despite the fact that today, yet again, we got more bad economic news, very bad, as a matter of fact, what happened? Well, a trifecta of new all-time record highs in this market. Dow Jones Industrial Average, boing. Guess what? New record high. S&P 500, NASDAQ, same thing. Make it up. Sit back and make it up. It's impossible to do. But that's, again, the phenomenon I have explained to all of you, I don't know for how long, years now, would continue until it doesn't. Let me explain something else real quick. There's always a trap door that sits underneath this market, okay? But if you get yourself into the right spots, like I outlined for you day after freaking day, you don't have to worry about it, okay? Yes, look, why am I getting all uppity right now? It's pretty simple. Maybe one day I'll take a snapshot of my email box and I will show it to you. It's a freak show among itself. And, there's a lot of people out there, rightly so, who don't trust this market. What do I trust it's going to do? It's going to be rigged some more, and then rigged even more on top of that. So, that's the only thing I trust with this market. It's a freak show. And nothing makes sense. PE ratios, valuations, forward guidance, all about easy money, which is not going to stop. Suppressed rates have created such a twisted and distorted monster in this market. It's out of control. It's out of control. Henceforth, why we keep seeing what we are seeing, like more bad economic news drive the stock market higher. This phenomenon will continue, people, until it doesn't. And again, yes, there's always a trapdoor under the market. But if you keep yourself hedged, if you have yourself, for example, in any one asset class, well, you're carrying a lot of risk. But if you manage to get yourself somewhat diversified and understand why you're doing it, for example, I explain over and over and over again to all of you, my lovely friends, the environment now is what? It's risk on. What does risk on mean? It means cash is making its way into the stock market despite anything else. Cash is moving into assets where it has no business going into and coming out of assets it should be going into in this environment. It's so twisted, again. But this is what happens by design when you have a runaway central bank fueling the market and promising to fuel the market even more with more easy money, promising to funnel dollars around the world. The market is the most twisted, perverted, maybe is a better word, entity among itself in the history of the world. So the market, again, just despite whatever is thrown at it, keeps going higher. Record high, record high, record high. No surprise to you. I've been telling you this for years. Watch, people. Record high, record high, record high. Oh, no, Greg, you're wrong. This guy's saying the market's going to crash next week. Oh, we're going to laugh at you, Greg, when you're wrong. Well, I haven't been wrong yet. And I'm not going to be. You see, you and I, we know the game. Not only do we know the game, we know it well. We know what they're going to do before they do it. So what does that allow us to do? Get ourselves in the right spots. Absolutely. We know at one point, people, that risk on is going to turn risk off. There's no doubt about that. So yes, you should be in this market. You should own large cap dividend paying stocks. You should be trading this market. Absolutely, if you are so inclined. You should absolutely be betting against the debt, becoming your own central bank. This means holding hard assets, like I keep telling all of you. Gold, silver, let them play their games. We're going to play ours. Let them suppress the price of precious metals like they're doing. I don't care. Because in the long run, risk on is going to turn risk off. And all of this is not just, you see, look, let me situate myself a little bit. We will be getting a moment of reckoning here, okay? A trap door is going to open underneath this market. And most people are going to fall through that. And I mean most by and large, not you. Not you if you follow this blog. I will keep you on the right side of this like I have been doing for years. Years and years, despite all the calls for everything else that is supposed to happen, which just never does. Like Bitcoin going to zero. Like this stock market crash that was supposed to happen last month. It's epic. Forget about this crap, okay? And we don't even care, you and me. All we want to do is protect ourselves for when this eventually rolls over. Yes, indeed. We have things like the MMRI to gauge risk in this market. But there's always risk. You understand? The higher that number goes, the MMRI, the more risk, but there's always an outlier. There's always the chance that something's going to occur. That's why you got to be hedged. You got to be in different kinds of asset classes. To me, it's, in the stock market, quite obviously, betting against the debt, becoming your own central bank, holding gold, silver, my favorite of all time, platinum, palladium, cryptocurrencies as well, and other things too, if you have the means to do it. Artwork, musical instruments, these are things that I own too. Look, I think you get it. I've covered this stuff all the time. But the phenomenon here is going to continue. The more bad economic news we get, and it's going to continue. You have to understand, if you're new here, if you've been with me for any length of time, I don't know, even 3, 4, 5, 6 months, you get it. Our economy is cratering. It's cratering, okay? As a percentage of GDP, our economy is in free fall, more so than it's ever been in history. So as our economy contracts, well, the bad economic news will continue. It must. You understand? It should make sense to you. Ding, ding, ding. You got it? So I want to cover a bunch of things with you. On top of the fact that this market here just hit a trifecta of new record highs. We got gold and silver got a bit higher. Crypto's flat to slightly higher as well. Crude oil around 84. Looks like we're not going to get a pullback here in the market or in crude oil, but you always have to be ready for it. Not only do you have to be ready for it, you should always keep some powder dry. Okay? Some powder dry so you can jump in here, because I'm going to promise you yet again, every single dip that comes through here is going to get bought. As long as crude oil, I'm telling you to watch two things. It's not that hard. Crude oil and the MMRI. That's it. You forget about all the other I was going to say a bad word. Dog shit. That's going on. Okay, follow these two things. Realize the bad economic news is going to keep coming, and realize that whatever talk there is from the propaganda ministry, I'm referring here to the mainstream financial accounts who are only there to lie to you. That's all they do. They exist to distract you, to tell you to look here, not over there. As a matter of fact, we got some of that today. Oh, here we go. This was pretty much being sprayed across, CNBC, Bloomberg, Fox Business, pick one. They're talking about, again, the distraction mechanism. Oh, it's supply chain disruptions. It's shortages. It's the skyrocketing cost of energy that's creating all this inflation. Oh, but not even a peep, a syllable, nothing. All day from one of these freaks over there talking about the Federal Reserve running its inflation creation machine at full speed. Oh, no, because you're not supposed to know that. You got to look over here and over here. You got to have your mind twisted upside down, backwards, and sideways, but you all know that too. But that's the story here. It's incredible. Consumers are hurting. We heard about manufacturing today, slowing down. Oh my God, the shock. Really, it's slowing. Manufacturing is slowing down. I wonder why that's happening here. Again, our economy it's done. Construction spending falling off of a cliff, and of course, it's unexpected. unexpectedly, these people are sub morons. I mean, they don't even rank a duh, because a duh would be way, way over their pay grade. You understand? Anyway, let's cover some of this stuff here. So here's the part of the freak show that I really can't stand. So we heard from, again, Treasury Secretary, former Fed chairwoman, the thing, the troll, the gnome, known as Janet Yellen. Janet Yellen stain to you and me, okay? Stain. She's a dark stain upon this earth, okay? That's the truth. And she's talking about how the economy. Oh no, the economy is not overheating. And Fed Chair Powell, he's done a fantastic job. Really, yeah. Of course, if you were a central banker or a former central banker, you would look at what she has done and what this guy has done and every other central bank freaking freak show individual, and you would be applauding them because they're fulfilling their end game to become the lender and buyer of last resort, to own it all. You know that. It's freaking insane. So yeah, the economy, guess what? It's not overheating, Janet Yellen. It's in free fall. What is overheating, by design, of course, is the hyper debt bubble, which has reinflated a stock market bubble like we've never seen in the history of the world. Okay, but you're not supposed to know that. No. We got how about this one? A moderate slowdown in U.S. manufacturing. Orders dropped to a 16-month low. That's part of the bad news today. And of course, I already touched on this. Construction spending unexpectedly falls. It's unexpected. It always is. You can't make this stuff up. You can't do it, people. You can't do it. I don't care how hard you try. I really don't. Anyway, look, you and I are in a freak show. Okay, we are active. Well, maybe we're even active participants in it. Why? Because we transact in what they tell us to transact in. Oh, no. You can't transact in gold or silver. Oh, no, you definitely can't Can't transact in cryptocurrencies either. Oh, no, because you see, that would be outside of their system. They're going to try to keep you in the dollar, which is a dying asset here right now. It's a dying asset by design. Why do you think the Fed continues to run their inflation creation machine? You think they didn't know this was coming, people? Let me explain this to you in case you don't know yet again. Everything you're seeing is a side effect of something that's been put in play from years ago. Okay, years ago. The Fed is not flying by the seat of their pants. This is a plan that has been in effect since their creation over 100 years ago. And they have fulfilled their end game, their final solution to be the ruling body of the world. We have no representation. You know that. Anyway, people, look, I got to calm down a minute here. I want to thank those of you who have chose to support my work so far. On the first of every month, I humbly ask for your support. And I'm going to be straight with you. I asked this morning for people to support my work. Only a couple hundred of you have. And it's a little disappointing. I'm not going to lie. I hope more of you will choose to support my work. Like I said, I asked for $5 a month. I don't think it's really that big of a deal. Anyway, people, I got your back whether you support my work or not, but I do hope you choose to support my work. Again, if you do choose to do so, I would greatly appreciate that. And there are links in the description of this video. One, if you'd like to send me $5, that's fine. If you want to send me cryptocurrency, I would greatly appreciate that too. All right, people, look, this guy here loves you a lot. I mean that. Think about the things I covered here in this video. Make it up. Make any of it up. What I just told you, you can't do it. But again, you and I have been light years ahead of the curve. Light years. Because we know what they're going to do and when they're going to do it. Now, we're going to hear from the Fed this week. You know what? Hold that thought. We'll talk more about that tomorrow. All right? I'll see you in the morning.